what's the tax liability later in life on a 401k, and how do people prepare for that tax liability?
When you asked originally or made the statement, how are people preparing for that? I don't think they are because I just don't believe I don't believe that the most people that have 401ks are preparing for that situation. They might have a general understanding that it's taxable. And in the thought process where I'm going to be in a lower tax bracket when they retire, that's kind of the mentality that you kind of hear when talking with people. Um, and there's only one way. You and I have had this conversation, I don't know how many times. Well, there's only one way to be in a lower tax bracket. One way. Earn less money. That's not that's not a significant and positive retirement in my mind. Um,
I mean, that's not
now,
a good plan.
I mean, from the standpoint of it, you might not have the expenses. I will grant people this part of it. If you have a family, kids are out of the house, the expenses are gone from whether it's college, whatever the expenses, vehicles, all these kind of things, overall grocery bills, you know this right now. Both of us are living this. The overall household expense is going to go down. So I will grant you that.
Mm.
But the other side of this is medical insurance, Medicare, these kind of things tend to go up because as we get older, we tend to have to rely on other things. Excuse me. So expenses do potentially drop. So maybe you don't need as much money. So I will grant you that. But at the same time, cost of living continues to go up. So it's kind of not a complete trade-off, but it's kind of close from the standpoint of if things keep going up cost-wise, but our income, we only live on a finite amount of money per year because of the fear of outliving the money. Back to that conversation again. We're not really preparing ourselves and understanding what that tax liability might truly mean in a plan like a 401k. It's ordinary income tax. It's income. So if that's your salary, you're going to be taxed on that. So are your deductions going to be less because you don't have dependents any longer? Maybe you have a mortgage that's paid off, so now you don't have the interest deduction any longer. Um, you start putting all these things together. You might have a standard deduction, but at that point, your taxes might not really be lower. Now, God forbid you become single, someone passes away. Now your father's dealing with this, in terms of he became a single man again. So filing taxes as a single is greater than married filing jointly. So people don't think about these kind of things. Yeah, in terms of 401ks, IRAs, these types of plans, we've talked about this many times. We have a partner, and that partner is the IRS. So when it comes to taxation, these plans are going to be taxed at some point. You're deferring that tax to the future. So you're taking that tax deduction today with your contribution in terms of your salary and your income, but for the future, you're now pushing that into the future where we are dependent upon whatever the rules are at that time, meaning the IRS rules of what our taxation is going to look like. So when we're talking about possibly being a lower tax bracket, we don't know that to be true in terms of where we might fall based on where the tax codes might be in the future. So when that partner, is going to remain with you arm in arm throughout this process in terms of when you go to exercise this money in the future. So we need to be in an understanding that at some point we got to pay the piper. We got to pay Uncle Sam, and that money's going to be owed. And if you don't want to take it, that's when the RMDs come into play, that required minimum distribution. So at age 73, if you're not taking the money out, Uncle Sam's going to start forcing you to do so because they want their tax dollars because you've deferred it throughout your entire work life. So these are things that people need to understand and make sure that I've run into this. Well, I think you have as well. There's people that don't think they have to pay tax on that money. I can't believe
Totally
there's been
unaware. Totally
I've
unaware.
run into that. I can't tell you how many times. I'm shocked to learn it. When someone says it, I'm like, are you being serious? Kind of a thing. They
Pulling
they
my leg or
don't
what?
realize what's that.
So you pulling my leg or what?
Yeah, they don't realize that they think, well, this in this plan, I get this money when I go to retire. This is my money. They don't understand. I'm not saying everyone, but there's a percentage of the population that does not understand they have to pay tax when they go to take this money out.
Now, I don't think they understand either that even if they die early, the money's still going to be taxed.
Yeah, they don't understand their beneficiaries are still liable for the tax.
Yeah, they don't. So another thing people don't think about is when preparing to pay taxes on your 401k, and we're talking about how a lot of people don't know that it's taxed. Think of this. The bigger the account, the more you have, the bigger the bill. The more you have, the more taxes you owe. And you said it earlier in the conversation, but people have to understand that it's not about how much money you have, it's how much money is yours and how much do you have to spend. Period. And
Well, on that
especially
point, well, when you said
down
the
to.
more money you have, the bigger that bill is, when people hear they get a match, well, that sounds wonderful. They say it's free money. That's what you hear. People say that. It's free money. No, it's not. They're giving you the money. All they're doing is making that bucket bigger, which is great that you have more money, but now that tax bill is going to be bigger. There is a trade-off there when you hear, well, I'm going to get a 3% match or whatever that dollar amount ends up being. Well, that's wonderful that my account potentially is going up, but that's just more money that has to be taxed. I don't there's a fine line there in terms of that being a positive or a negative type plan. And these are conversations that we have with individuals, getting them when we classify ourselves, Will, you and I think as financial educators, we're trying to teach people how money works. People don't understand for the most part how money truly works in terms of all the ins and outs, positive and negatives in terms of loss versus gain. What does that mean when you go to take the money out? Is it taxable? Is it not taxable? Is it qualified versus non-qualified? Some people don't even understand what those terms represent. So if they don't understand that, then how in the world are they participating in it? That's a problem. People, because now you don't have open enrollments anymore with 401ks. You just automatically can start contributing. Well, who's given an education on what they're contributing towards? Is someone sitting with them and truly giving them an education on what that represents? Meaning, what are you participating in? What does this mean to you? What does it mean today? And what does it mean tomorrow? Today, in terms of being a reduction in terms of your income, but tomorrow it's a tax bill. And here's the problem. When we have these conversations with people, I haven't run into a single person when I ask the question, do you think taxes are going to be higher or lower in the future? I haven't run into one person that thinks taxes are going to be lower. So if you think taxes are going to be higher and you're in your 20s and you have a long future before you ever tap into that cash, and you think taxes are going to be higher, why are you rolling the dice and saying I'm putting my future, all of my future, into an absolute unknown bill? You have no idea what that bill is going to look like 30 to 40 years from now. And we're predicating our future on, we're rolling really red or black in a casino and saying, man, I hope it hits black. If it hits red, you're in big trouble.
Yeah.
And we are playing Russian roulette with our money, and we're gambling with our money 100% from start to finish. We're gambling. It's a casino, man. The market is a casino. And it's an addiction. People get addicted to it. People love gambling. I like gambling, but people love going in and saying, what is happening with my money? Is it up or down? They're playing. There's people that are fixated on it.
Fixated.
And if you hit the wrong color, how much time do you have to recover that? And here's the other part of this game. If you hit the wrong color at the wrong time, meaning your kid's starting college, your kids possibly have weddings, or you go to retire, and these colors hit at the wrong time, what do you do?
Or you get injured and can't work, or you have a death in the family.
Yeah,
or
what do you do?
You get sick.
Yes. What is the recovery? How do you fix the problem? And it's a problem. You only have so much time to work. And here's a situation that we're seeing more and more. People are working longer. Why? A lot of people have no choice.
Right.
They have to because they don't have enough. When you see the savings overall as a nation, we're at an all-time low. So when people are trying to retire and they can't, and they're 67, 68 years old, and they're thinking, man, I should be retired already, but I can't. Because if I retire, I only have $150,000 to live off of. How do you replace walking away? If you are making 100 and you have 150,000 in a 401k or whatever you're doing, how are you walking away? Well, I
Right.
have Social Security. Okay, well, that's not going to pay for it. That might be a third of what you were making. Where's the other two-thirds coming from? Well, my cost of living is going to be down. Okay, you're going to live on two-thirds of your income? I don't know, man. I mean, these are conversations we have, and they're not pleasant ones to have. And it's a
Well,
reality check.